All right, on to the next video. In the last video, we spoke about traditional bank lending, traditional business loans, and what's required, and the ins and outs, and why you have a better solution. So let's go over your better solution. And it's something called a short-term business loan and how they work. So what is a short-term business loan? Well, a true short-term business loan typically has no collateral. The term is usually shorter. So the payback term is typically anywhere from as short as a few months to as long as 2 years. Okay, usually it's between 8 to 15 months. That's about average. Okay, of course these loans have no collateral, unlike bank loans, and or it can be what's called an MCA loan. An MCA loan, MCA stands for Merchant Cash Advance. So because these loans have no collateral, they get the next best thing. The short-term business lender will use that business owner's credit card purchasing account. So their sales that they get every day from credit card purchases will be sort of used as collateral. So out of those sales, a certain amount of money will come out every single day in what's called a micropayment to pay for the loan. So daily micropayments out of their daily sales. So it's sort of like collateral on their sales, if that makes sense. Now, who provides these loans? They're not banks, of course, and they're typically a broker for specific lenders. So these lenders, try not to get these two words mixed up. A lender supplies the money. A broker for the lender works with many lenders to find their client the best deal. All right, so later on in the manual, we'll go ahead and give you a couple of referrals or recommendations for two great business short-term loan brokers. Okay, so of course, these loans are not for everyone. Some cases do not warrant this type of loan, but you will be surprised how we'll show you how this type of loan can be less costly, even with a higher rate or a higher fee than the traditional bank loan. And we touched on that a little bit in the previous video, but let's go ahead and move on. So compared to traditional banks, who usually get turned down 8 out of 10, only 20% get approved through traditional banks, these short-term business loans usually have about an 80% approval rate. Wow, isn't that good news? So 80%, 8 out of 10 business owners who apply will get some sort of an offer, some sort of an approval. Okay, now remember, banks typically take months and months and months to fund the loan. So the business owner will not see that money for a long, long time. But with these short-term business loans, they can get the money in their account within a few days or a week on average, sometimes less, sometimes more. Typically, it's not less than 3 days. It can go beyond 7, but say 3 to 7 on average, and you'll be safe, okay? Who's the targeted client? Any business owner who's in a pinch, any business owner who needs money quick. Remember, businesses usually need money quick, and banks can't do it. It just doesn't exist with banks. So if a business owner needs money in a quick time frame, they're your target. Business owners who have good or bad credit. Now, what are the requirements? Of course, you saw the last video and the long list of requirements, and we didn't even touch on everything. Let's look at the short list here. First, they need to have cash flow of $10,000 or more. If you remember, banks typically require $50,000, give or take. So $10,000 or more. Consistent deposits, usually 3 to 4 deposits into a bank account every single month. A bank usually wants 10 to 20. What about business history? Remember, the banks want at least 2 years in most cases. Well, we have business partners, business loan partners who can get them a loan if they have at least 4 months under their belt. What are the required documents? And by the way, that's about it. There are a few others, but these are the main 3. How short is that? Now, let's look at the required documents. Of course, they'll need a copy of the driver's license. Just 1 year of their most recent tax returns. 2 to 3 months of bank statements, 2 to 3 months of merchant statements, merchant credit card processing statements. And that's about it. There might be one other, but it's something, the application. So they need to fill out an application. I did not put that on there, but that's it. Compare this to the list of 15 to 30 items on the other one. And what a difference. Okay. Now go ahead and read the manual, the training guide, for a detailed explanation of all these things. But let's go ahead and move on to how these type of loans are paid back compared to banks, who typically offer several years. We already touched on this. The payment term can be anywhere from a few months to 2 years to pay back. And they're paid back in daily micropayments. If it's not an MCA loan that we just discussed, it's a regular business, short-term business loan, it's still daily micropayments. Now, why is this good? Well, it hurts less. And it's almost, I've talked to many business owners, it's almost like they don't even notice it coming out of their account. It hurts a lot less than making that big old monthly payment every single month. So renewals after 6 months, what does this mean? If they have good payment history of 6 months, a lot of these companies will offer them a renewal. This just means they can basically refinance their present loan and get a higher limit if they need more money. And guess what? You get paid again on that. Pretty cool, huh? So that's about it, guys. Move on to the next video. And if you have any questions, reach out to us.